What's up, Chris? Tuesday.
Jay, how are you doing? It is a fine Tuesday today.
I
Um,
almost said
this
Friday.
one is this one's not. It's just a regular Tuesday, but it's an exciting one because everybody in the world gets like a day off this week. Not in the world. Everybody in the United States gets a day off this week. Lots of people get two. If you own an e-commerce business, maybe you get zero. Um, but you're getting close to past that time where you can like maybe take a breather. Welcome.
Honestly, if you've built your e-commerce business the way you wanted to, you
You're
should be off.
already taking a breather.
So yeah,
Yeah. Yeah, that's true.
and
That's true.
that's
That's true.
kind of what the
Welcome.
what the point of this show is to help you be there, so your
That's right.
e-commerce business will run on its own.
Yep. Welcome, everyone to the Practice Playbook, the show where we
Your
help
accounting.
firm owners and yeah, on the accounting side, right? Where we help firm owners and wannabe firm owners navigate the road to for their modern firms. I am Chris Kino, and I am here with Jay Kimmelman, and we host the show. Last week we talked about tax strategies, and I didn't do it this time, but I normally put that in quotes because they really suck. They're out there on Instagram, on TikTok. Some of them are pretty bogus. Some of them are not all that well thought out. But your clients might be seeing them and wondering why you're not doing that for them. So we highlighted why those strategies are bad, some of the things that they may be overlooking, and we talked about how you can talk to your clients about them. So go back to that episode and take a gander if you're interested in getting more information on that. This week, with Thanksgiving just right around the corner, we're all about giving thanks. So we're going to highlight a few items to reflect on and be thankful for heading into this holiday weekend. But before we get to that, we will do what we do every week, and that is get to the news. There's a good amount of news this week. Most of it pretty like low bar stuff, I think. But we can talk through it and see if you agree. In IRS and tax news first. The IRS issued some final regulations for clean energy partnership credits. Jay, how many times have you dealt with a clean energy partnership credit?
Huh? What?
Yeah. All right, perfect. I kind of thought that this was like a lot, not that heavy of a hitter, but if you do deal with clean energy, partnership credits, hey, there's rules,
I am
and
sure
written
there are some
rules.
boutique firms that deal with specifically clean energy partnership credits.
I am sure that's true. And so
Yep.
if that's your niche, you probably already know this. You didn't need us to tell you, but hey, just FYI, the IRS issuing new rules. The IRS is also doing some planning, right? They want to have National Tax Security Awareness Week, and that week is next week, if I read the article correctly. And of course, anytime you're talking about tax security, what you're talking about is the importance of cybersecurity, and especially we've talked on this show about the whatever $150 million fraud that went through the PPS line, whatever that is, the call fast line. So being aware of like the issues that are out there is an important thing, and so actually applaud the IRS. Good job of you, IRS, by highlighting that tax security is an important piece of security, and we should all be aware of it. Um, they
Now,
also, oh,
I would have thought the last 3 weeks was National Tax Security Awareness Week because I've been inundated with ads. Have you filed your WISP yet, or have you created your WISP? Do you know what a WISP is?
no,
Yeah, it is a written information security plan, and every firm or any tax preparer is required to have one. So
oh,
that kind of is the whole goal of next week. Make sure you have it. Make sure that you're securing your systems. Make sure that
yeah,
you are securing your files and you're shredding you're not putting your trash out with security social security numbers, names, and addresses because
yeah,
that is what happens. And I think it's great that the IRS is doing this. It's great that RightWorks has been hitting us for weeks now with the ads. And it is something that every firm needs to have. So yeah, let's get those wisps going.
yeah. So good. Get your wisp together, everyone. It sounds like I maybe need to as well. Click very clearly. Um, Wonderful. There was also there was we've talked about it before here. There was a change to the R&D tax credit, but the IRS has extended the period that change is supposed to be like carried over or something like this to January of 2026. If you've heard us talk about anything, this is probably just a formality before they bring the credit like all the way back or something like that here in the next year or so. Jay, is that a really poor interpretation of what's going on here?
I think this takes the credits out to January 2026. I think there
Oh,
was
okay.
a end on the actual tax credit plan. And
Okay.
what we are looking for is what we are looking for is yes, my phone's ringing. What's up with that? Uh, Looking at the reversal of the Section 174 regs, which is forcing the R&D expenses
Oh,
to be capitalized and then
got it. These
amortized
are
over
different ones.
5 or 15 years, whether it's domestic or foreign related. And yeah, we know that was part of the extender bill that passed the House, not the Senate. I expect it to pass. They may even put that to vote on day one.
Right. Yep. That sounds right to me. That's also a good reminder to everyone out there of why Jay and I make such a great couple here, because I didn't know anything about this and Jay clearly does. So there you go. Hopefully, it's not Jay knows everything about everything and I know nothing. Um, but uh, but
That is
I guess we'll find
definitely
out. We'll
not
keep
the
watching.
case because anytime you bring up the PCAOB, it's like,
Hey,
all right,
that's later. PCAOB is on the
there you
way.
go. See, I
On
know
the
it's
way. We've
coming.
got some PCAOB news later. But before we get
Yeah.
to the PCAOB, the IRS also, or the ERC claims withdrawal process was extended for third-party payers. So if you blew it, you can extend that process now. So they changed that. They've extended that rule so that you can continue to ask for that forgiveness. I believe is kind of how that works. And then finally, in tax-related news, and I'm not sure really how much this even matters today, or even if it even has a significant impact going forward. But President-elect Trump has indicated that he is going to nominate Scott Bessent for Department of Treasury Secretary. So if I am right, and Jay, you can correct me when I blow this one too, but if I'm right, the Department of Treasury oversees the IRS, which means that the Department of Treasury kind of has some oversight with respect to IRS activity, which means that this guy is pretty influential going forward. Jay, I know we were talking about Mr. Scott here, or Mr. Besant here, just a minute ago before we started recording. In that brief research, is there anything exciting that people should know about, or is this something that we will want to monitor going forward?
Well, I do know that the street is very happy that he was nominated. Stocks are doing really well, and the CEOs are cheering. Major headlines that I read a few moments ago. But
Sure.
as far as tax strategy and tax plans, we don't know where he stands. I did
Yeah.
hear him say that tariffs on a strong dollar are good, tariffs on a weak dollar are bad. So
Hmm.
we shall see. But, and speaking of tariffs, it was, I don't know if it was announced today or this morning overnight, but
Yeah, overnight, I think.
President-elect Trump has said he's going to invoke 25% tariffs on Mexico and Canada, and that is basically going to be there until Canada and Mexico tighten up the border and stop allowing illegals coming through and stopping fentanyl. So I don't know how much Mexico or Canada has any control in any of that, nor I don't believe
Yeah.
they care if we put a tariff on their company's goods, because all
Yeah.
those companies are going to do is pass that on to the American taxpayer, because that's
That
what tariffs do.
Yeah.
So,
Um,
you know,
one thing that I saw with respect to this, I saw a little chart about this either this morning or last night, and I think it was probably on Twitter. In that chart, it indicated that the majority of stuff that we import from Mexico and Canada is food, and so it seems
good point.
a little bit misguided and miscited to drop tariffs on food product. Um,
Right.
it's not like that. It's not like you bring food manufacturing back into the United States. It's not the same, not the same kind of thing, because
Right.
that's
And
much different.
these tariffs are not to force that. It's to force something else, which,
Yeah,
I question that.
yeah.
But
I don't know.
the other side of
It does
that
seem like a great
was
strategy.
they also announced as part of this tariff, there will be a 10% tariff put on Chinese goods as well. And they're talking about medications and other things of those sorts that it's
Mm,
going to impact. Now, this is before the 60% is even thought of. So just throwing that out there.
right.
We shall see what happens.
Yeah, and so again, this may be posturing, but this one doesn't feel like posturing. He already won,
Right.
but maybe it's to like maybe it's with another intention or something like that. Because this particular one, the Canada Mexico one, seems really, really, really short sighted. But I guess we'll see what happens, and again, maybe it will get some concession somewhere else, and we'll be
Right.
like, oh, there you go,
Yeah,
how
we shall
amazing.
see.
Who knows? But that today is our IRS and tax and I guess tariff, which is tax in disguise news. In other accounting news, in PE Corner was quiet this week. Although I did read an article about the Accounting Today Private Equity Summit, which I guess was recently, and a couple of takeaways that came from there. Some things that we haven't talked about so much on this show of because we've been kind of private equity kind of sucks but there are some positives that come from private equity, and that's what the article that I read about the Private Equity Summit talked about. And that's that there's fresh cash for fresh ideas, right? If you're innovative, if you're doing something unique, you have the ability to fund that a little bit more. It also re-emphasizes, and I think this is important, that we need to reimagine how firms operate at scale, because that is a thing that we already have a problem with, right? We have a talent challenge as it is. We have a aging workforce, particularly in our profession, and so I do think it is really important to reimagine how that works, because we want the profession to continue to be around, and there's nothing like private equity to find a more effective or certainly more cost efficient way to do something. So private equity probably pros and cons. I think we did mention that previously, and Accounting Today's Private Equity Summit talked about some of those. The FASB. So Jay, here's a good one for you. The FASB did a ASC 606 debrief that they released over the past week. For those of you who ASC 606 means like whatever Section 174, if it's like that to you. ASC 606 was the revenue recognition guidance that changed and tried to converge U.S. GAAP with IFRS revenue recognition policy. And it came out, and this seems like absurd to even think about, but it came out 10 years ago. And so the FASB does, when they it sounds like I was not aware of this, but it sounds like when they issue like big standards like this, they want to know how it worked, and so they went and did a debrief. What they found was kind of what you would have expected. Actually, they found that initial adoption was pretty hard. There was a lot of expense that went into initial adoption. There was a lot of time utilization that went into those first years. They had some fancy graphs in their report that showed this like huge spike in costs and the related stuff right at the beginning, but then those kind of layered and managed off. But that's exactly what they were expecting. So the benefits and costs were what they were expecting. And I think the most important thing, at least from the FASB's perspective, was that for this particular standard, the costs were worth it for this convergent process, right? It now makes those financials in the United States easier to compare to those across the world that are using the international standards, and then also provide some extra clarity around how companies are recognizing revenue, streamlines and makes those things more consistent just across the board. So the FASB seemed to, at least from the way I read the report, I didn't read the entire thing. I read the summary, but at least from the summary, it seems like the FASB is pretty pleased with how this process has gone. So that's some FASB news. Wherever they also, the FASB also they issued a new standard this week, which is kind of exciting. But at the same time, this is maybe like clean energy partnership credits, in that the standard is, maybe very narrow in its scope, and that's that it is a new standard for accounting for the induced conversion of convertible debt instruments, which is a mouthful. But if you think about it, actually, for small businesses like this, actually may be very relevant. And that's the reason why I put it in the news today, is because if you are issuing convertible debt, and that's kind of how you're starting your business by funding it through convertible debt, and then you run into a situation where that conversion is required, now you have guidance on how to account for it under GAAP, or at least maybe some more clarity. I think that those types of conversions are and have historically been a little bit complicated, because you don't always know exactly what you're trading, and you don't know where you're trading it for. And in fact, we just recently helped a client that had a conversion of debt. I don't think it was induced, but it was just a more general conversion of convertible debt. And that process can be really complicated. And so having some good rules in place. I did not read the standard. I do not know what the rules are, but knowing that it exists, I think is a good thing. So FASB always doing work. I'm trying to make accounting better. So good job by the FASB. PCAOB, they also are trying to make things better. But man, this one, I don't know, man. Sometimes what the PCAOB is doing, it just drives people crazy. But this week, the PCAOB announced that they're requiring firms to share certain metrics around their audit practices and their audits. That includes like certain hours that people are using for their audit teams, how much training those people had, the levels of expertise that these people had, and stuff that's just there's value in knowing that, right? Especially when you continue to have audit failures, you want to be able to be like, it's that guy's fault because he sucks. He didn't get trained enough, right? Like you want to be able to blame somebody, but there just is more. It just is making particularly for PCAOB audits, like it's just making them, now you have one extra layer of compliance that you have to go through in order to meet the standards. So again, I understand what they're doing here, right? It is important to know, like, how long did the audit team spend in training around whatever, right? How many years has the partner been on the job? Like all these different things. Like these are kind of the metrics that they're adding. But I don't. It'll be interesting, I guess, to see what the KPIs are in the end of how that connects to what the end goal is, which again I think is an improvement of audit quality. And so if they start to say, okay, well, because of this metric, now we're going to ding you even more, or whatever it is, right? I think that'll be a thing to watch out for and really see what happens next. The requiring of this really, again, is just another layer of compliance for audit firms, which bummer. Jay, any thoughts about the PCAOB or FASB?
I mean, realistically, last time I thought about well, I can't say that about the PCAOB, but I know FASB comes up in annual, CPE, getting caught up on things. But really, the last time I really paid attention to it was preparing for my CPA exam. I know FASB? It's there. Yeah, come on. I'm not in public practice. I work for a CPA firm, but we do not do audit work. And, I rely on experts like you to help me with that. I do understand the standards. I do know how to apply them. But, like I said earlier today, I have a all-day CP. I hope I get my annual update, and I will hear all about the FASB updates and all of these fun things.
Induced conversions for convertible debt. It's on
go.
the way. It's going to be honestly, the last slide.
The convertibles I want to think about are Lexus convertibles. So there you go.
Oh, not even like Jeep convertibles?
Well, I was going to go there. But I can't. My Jeep is outside because of another fuel issue or battery issue. So there's no top off, no converter. So whatever that is. But I honestly, and a lot of what I'm saying is jest, but honestly, I want to know with you, is it thumbs up or thumbs down on the PCAOB?
Generally?
Is it, yes. Is it necessary? and is it doing its job?
Yes, it is. So for me, and I know that this may like seem kind of absurd, especially as like hot as I get around us, but for me, the PCAOB is a big thumbs up. Actually, it's a very important thing. It's basically like the IRS for public filings, right? Like they are an enforcement arm of compliance. So they want to their reports are cumbersome. Like the work that you have to do is probably a little bit too much, but like the net use of them is very positive. Like being able to have someone look at those financials and say, yeah, the auditor did a good job here is an important aspect of like public accounting because that entity is the one that allows our industry, especially on that compliance and audit side, to like be able to show we have integrity. Like it's kind of the thing that confirms that all of the stuff that we talk about in our opinion. And so when you have that opinion and you talk about, hey, we're independent, we found all the material misstatements, or there weren't any, or whatever it is, right? Like without having someone, like without knowing that there's someone like the PCAOB behind you, like making sure that that's true. Like, sure, yeah, you could get peer reviewed and they might bust you on something, but no one's going to see that publicly. And the
Right.
PCAOB is obviously very public and gets a lot of gets a lot of chatter, especially when they're the problem. I think is that when the PCAOB, when you hear about them, it's always in this negative light of audits keep failing and the PCAOB catches them, and it's like, oh man, PCAOB again busting people's ass. Like for what though? Like it's that's the reason why, right? Is because you need
Yeah.
that layer of enforcement. You need somebody to be able to say like you're doing a good job or you're not.
So,
And so
who are the naysayers to the PCAOB? Who wants to see it go away?
I think a lot of people that, I mean, I think that at least this is my understanding, and I guess I don't know. I haven't had a lot of conversations with people around this, but I assume it's folks that are like anti-regulation, um,
Okay.
and
And that's
or
kind
like
of like where I was going with this,
yeah,
because the talk of shutting down like the Department of Education and
hmm
changing the FCC and closing down like NOAA and the National Weather Service and the Hurricane Center, and
right.
is this something that could be possibly be on the cutting board?
Oh, I think so. And if you think about like I mean, I think the SEC has its own like kind of problems because the PCOB is just like a little underarm. Like they're part of the SEC umbrella because they are the ones that set the requirements for the SEC. So I don't think that the PCAOB itself is just going to like disappear. Like that isn't how it will work. But it could be rolled into and consolidated back into the SEC and not be its own standing body on its own anymore. But I think that that function is one that's really difficult to again, I personally would prefer not to get rid of that function. I think it's a very important one.
Right.
And it's not the same kind of oversight, right? Because if you think about like the Department of the Department of Education and the Department of Energy and like whatever it is that Buttigieg is, the Secretary of Transportation or whatever,
Transportation.
or
Yeah.
EPA, those type of people, right? Like if you think
Right.
about the EPA specifically, it was actually who I was trying to think of. Like they're enforcing regulations that are limiting corporations from doing stuff,
Right.
and the PCAOB isn't doing that. Like they really have a very limit. I mean, sure, I guess they are like circularly causing audit fees to be higher because people feel like they have to do more compliance to be in compliant with the PCAOB, which means that they're charging people more. But
Right.
but it's not the same thing because the people who are being audited and have shit financials, like they're not the ones getting busted here. They're not the ones that get that information isn't public, right? It's only
Right.
audit firms that are impacted at all. Now, of course, those bigger audit firms they have a lot of money and they make a lot of revenue, and so sure, I'm sure they'd prefer a little bit lighter level of oversight.
Sure.
Um, or even something that was more like a peer review where it's like across that kind of thing. But I think having the independent body, um, it, I don't think that's going to go away. It just may lose its name and become part of the function of the SEC instead.
Right. Gotcha.
Um, that's at least that's my. I don't know. I guess we'll see. I haven't read anything about it, and The second I
Right.
read an article about President-elect Trump says PCOB gone, we'll talk about it here. uh, some other things that we'll talk about this week. Walters Kluwer had their annual report out, and I read an article that cited it actually that said 62% of firms say modern software helps them have time to focus on their core business. I'm not going to lie, the 38% of people that don't think that, or either did not reply or don't think that modern software helps them focus on their core business, probably need to reevaluate the way that they're using that software. Because I think Jay, I know you and I would definitely agree. Modern software is really, really valuable in helping you to improve the way that your business works.
No, I'm curious what Wolters Kluwer uh, states is modern software because none of their tax software is. I mean, the software that we use is based off the
Uh-huh.
same old client server,
Ooh,
platform. I mean, the
PCH.
cloud access, that is
Uh,
the cloud version of, uh,
yeah,
uh, I can't remember
the
the name of
database
it.
stream thing.
Yeah, it's FX.
Access. Yeah,
Uh,
Pro Series.
but Pro Series,
No.
well,
Yep.
Pro Systems FX.
Yeah,
Pro
process. Yes,
Series
sorry.
isn't into it, but Pro
Right.
Pro Systems FX,
You're right.
and it's stored in the cloud. You still have to have a computer to run it. I mean, let's put tax software in the cloud, and then let's have that conversation, because 100% of firms would say it allows us to focus on our core business because we are distracted by this and the issues that we have to deal with. Because
Yeah.
modern firms like us, we run on more than Windows. We run on Macs, we run on Chrome, we run on all these platforms, and we
Right.
need tax software that does the same thing. So
And
yeah,
and I'm a little bit
don't get me
disappointed in
started
Walters.
on that.
I'm a little bit disappointed to hear that Walters Kluwer's tax solution is that bad. I know on the audit side,
Yeah,
they as I was leaving, so I guess it's only been 3 or 4 years ago now, but as I was leaving Seven, they had just rolled out or were kind of in a beta of a cloud-based audit software that was just an extension of Engagement, which is their more centrally located one. It was pretty like it looked like a pretty good functional system. So
yeah.
it may be that housing audit documents is a little bit more secure, or a little bit easier, like that kind of thing, right? There's a lot
There's
less data
probably
you
a
have
lot
to,
less PII in it for sure.
yeah, right.
But
So
you look at the Wolters Kluwer line of tax software, their least
yeah,
expensive line, and it's only for individual returns, has better technology than what we use as a professional firm that has all these high uh, complexity returns.
yikes.
It's so much better, and I'm like, can't we use that? Well, not really, because we it doesn't connect to your business tax software. It doesn't, and at least this was 3 years ago. This was
Sure.
3 years ago. It was better. So you would
Wow.
think that a platform like Access would get better, but it doesn't. The things that make it
Get your
better are the tools that are built by companies like Tally4, which integrate into it, which allow you to expedite uh, your tax prep. You know,
right.
the like I tested Tally for 4 years ago against the CCH solution. It
Yeah.
took 2 hours to do the work in the CCH solution. That took 25 minutes to do in Tally4.
Oh
Now,
man.
that feedback went back to the product manager at CCH. It got a little better, but so did Tally4. And
Yeah.
so, the third party tools market is ruling. And
Yeah.
when I say, and this is my opinion, when I signed up for CCH, I bought I bought the scanning, I bought the portal, I bought the storage. All of it sucked. Every bit of it. Their e-signature
Wow.
platform sucked. It was so much better to use the cheaper and better built third party tools.
Yeah. Well,
So just saying.
get it together, Walters Kluwer. Come
And,
on.
and let's go ahead and get off that soapbox so we can get through the news here. Because at this
Yeah.
point, we're
Sure.
not going to get done till Thanksgiving.
That's true. So obviously, Jay's very passionate about this. Modern software can improve your ability to focus on your core business. And in the same article that I read, they mentioned also a PwC study that indicated that 92% of organizations are using their spend to enhance data management, which is kind of exactly what Jay's talking about. And so that spending and digital transformation just allows your firm better connectivity, better consistency in both your inputs and your outputs, and that ultimately leads to better client service. And so I think that was an Accounting Today article that included all this information. So be aware of those products that exist and know that most everyone's spending money around here to improve their data management. I saw um, an interesting thing, and I can't remember. I didn't write it in the notes of who's doing this, but some intergovernmental agency has started to float the idea of what they're calling the SST Voluntary Disclosure Program. SST stands for Streamlined Sales Tax. And so this program is going to be like the same thing that you have in benefit plans and probably also in your own IRS related taxes to fix mistakes that you make and to correct them more easily. That streamlined sales tax idea, the concept related to that, is going to the table. Like they're going to start talking about it a little bit more in January. So I thought that this was really important. Go ahead, Jay.
So there was a project called the Streamlined Sales Tax Project. It's been around for 20 years.
Well, that is really embarrassing. Hey,
No,
they're
it's
bringing
not
it back to the
because
table.
they're bringing it back to the table. But there, at last I heard, there are only 20 or 25 states that are
Yeah,
actually in this,
part of this, right?
because what it would do is create a single sales tax across the U.S.
Yeah,
And states like California and New York, and I don't know if either of them are in it, but their sales tax rates are higher than they are in Florida. So they don't want to collect a smaller tax. But if you think about it, if everything was taxed, and then we still have to figure out how you're going to disperse this out, but if everything was taxed at a single rate, I would assume that the states would get more tax revenue that way, regardless.
right.
And at this point, if everything is taxed, there's no fudging it. You know, you're going to have to charge it, remit it, and file it.
Yeah,
So
the compliance becomes better,
just
right?
let's
And
just
then the
do it. I
states
mean,
don't.
exactly. And where we are today, we've gone from straight on-prem, and on-site nexus to economic nexus in 35 states.
Hmm,
So, you know, at that point, you're a lot of them are at that 200 transaction, $100,000 threshold.
yep.
Like there are states that have $500,000 threshold. But let's even this out because it is so difficult. And I've been, as you know, implementing Avalara for an e-commerce client,
Right.
and it's taken a lot of time to implement this,
Yeah.
and having to go through the registration process and using Avalara for that as well. I mean,
Yeah.
thank God I didn't have to do all of it, and I ended up getting the final pieces set up today, so we are ready to do our first filings in
Yeah.
it next month. I'm really excited about it. But if
Right.
we could simplify it, it'd be so much better.
Right. Right. And so the reason that I actually brought up the voluntary disclosure program was exactly that. A voluntary disclosure program is like a band-aid on a wound, right? It's just a whatever lipstick on a pig, right? Like it's a thing that fixes a problem that needs a deeper solution. And because the ability for companies and states to yeah, sure, a voluntary disclosure program allows you the opportunity to say, yeah, oops, I blew it, here's some money, don't penalize me and go back 100 years and take even more of my money. But it's just a lousy fix. Like the real thing that we need is exactly what you described, is more of this more sales tax reform more broadly, because the sales tax and dealing with all of the stuff that goes along with that is so complicated and so common, because of that economic nexus issues and everything that goes along with it. So, voluntary disclosure program, sure, great, good idea. Not the right solution. Will help in the short
I'm
term, doesn't fix the problem.
So we had a period where we had the voluntary disclosure program in place, and basically you had to disclose sales from this date to this date and pay your tax. And there was still, there's always a question, because I'm filing sales tax, do I have to pay income tax? And that comes up all the time. And that is a client's decision. We give them
Mhm.
all of the information. Hey, this is what your exposure could be. This is what we think it will be. What do you want to do? And they'll say yay or nay. If they say nay, I say, I suggest you pull at least 75% of this amount, put it aside, because at some point they're going to come after you. And so, and I have a client that went from filing 3 states to doing the voluntary disclosure and now files in 32.
Mm,
Some of those we are still working out some of the amounts that they have
yeah, well,
amounts in 2024 that they were still paying on getting all of that processed. And
mm,
as a result, we do 32 states of tax returns because they want all in. And it too is a pain because you're doing this after the fact and you file and you're like, well, we don't have any record of you. Who are you? And they will process the return. They won't process the payments. So, the IRS is
mm,
one thing, but then now you're dealing with 30 different states who handle it
yep,
very differently. So voluntary disclosure is a good thing, but it's a double-edged sword.
yep. That sounds right.
Again, like
So,
any other compliance issue, it's going to drive your costs up.
yep. So there's definitely, obviously, there's a lot of things to think about that. They are just bringing it to the table. It's not a thing that's even like live again.
Yeah.
But they're talking about it. And again, I think a streamlined sales tax and just easier compliance more broadly is better for everyone. Kind of like you were talking about already, Jay.
Yep.
So maybe they'll get to that. We'll find out. One one article that I read, the final piece of accounting news that I thought this was so funny. The UK government, they have like a their like own like auditor of some sort. I don't know exactly how this works. I think it's an internal thing, like the GAO or something here in the United States. But they got a disclaimed opinion for the first time ever. And the reason that happened, at least according to the article that I read, was that a lot of local authorities and jurisdictions either weren't providing the actual underlying information that they needed. 40%, I think, just didn't even include the information, and then another 40% provided just unaudited information, and so like 80% of the 400 and something counties in the UK were either non effectively non-compliant or non-audited, and and whew, man, that's a tough spot to be in for the UK there. So I I say that, I guess, and maybe if I reflect on that a little bit more, maybe that's just kind of the way that it is, where governmental oversight is just becoming more difficult because governments are so much bigger than they used to be, and all of that kind of thing. It seems like every year we hear a story about how the Department of Defense and the Pentagon like failed again because they don't know where billions of dollars are. Like maybe this is just maybe oversight of multi-trillion-dollar governmental agencies is really difficult to do.
Yeah.
My expectation is that while this was the first time that the UK government had this issue, it will not be the last. And especially if you're at a level of 40% of people not even giving you the information, like there's sure to be a problem again. But I thought it was at least interesting news, and that is the accounting news. And if you can believe it, Jay, we also have tech news. So we'll bang through this tech news here pretty quickly. Financial Sense, which I think is an accounting platform, we've talked about them before. They have released a new billing feature, so they're allowing you to be billing through their program, their platform. So, good job by Financial Sense of adding in that feature. That's great. Avalera, who you talked about earlier, they have they've released lodging or hospitality management, like specific content, maybe like their own set of things, because obviously hospitality management has its own sales taxing issues. So Avalera is looking out for they do this with a lot of different niches and industry categories, because they do have so much information around this. So if you service folks in lodging and hospitality, maybe look to Avalera to get a little extra information on this. And then finally, as we have come accustomed to do every week, Jay, you'll be shocked to learn there was AI news. The one of the
This whole
articles that I
AI
read.
thing's a fad, man. It's never gonna take.
Well, it's kind of funny that you say that, because CPA trend lines, they had a headline that was really, really eye catching, and the trend line was artificial intelligence may already be plateauing. And it was a premium article, so I couldn't read the whole article, but I read the first little line, and the first little line said, they talked to somebody at OpenAI, and the person at OpenAI was like, "Hey, Cheetah, or whatever the new version of ChatGPT is, it doesn't scale as much from. It's not as big of a change as it is from 3 to 4, which, like, yeah, duh, like that kind of seems obvious to me, because 3 was obviously like a significant change from what I imagine there was a 2. But did anybody hear about Chat GPT 2? No, and that's because it wasn't all that good. But Chat GPT 3 was, and Chat GPT 4 improved on it, but it didn't even exist in the prior versions. And so, yeah, I mean, I think software, like any software, is that way, right? Where your growth scale and the like feature layers they're not whatever parabolic, they're log based, where you start to like cap out, or you're continuing to grow, but you grow at less and less of a rate. So like it is a eye catching headline for sure, but also not a surprise. But can you imagine though, like, think of all the features that happened from 3 to 4 of ChatGPT, and even if you took half of those and added them on what would be 5, like, that's still a like super powerful product. So
Well, half of
even
the
if
enhancements we've never seen. I mean, it's behind the scenes
yeah,
stuff that is doing what it's doing to make the platforms better. And
right,
we just don't know what those changes are because they're not going to publish that because that's their IP. That's what
yeah,
their investment is. So
right,
we're going to find out only what is public and what they want us to know. And
right, and kind of how the use case goes, right, not the
yeah,
behind the scenes.
exactly. Yeah.
Yeah, and I do think that is a good thing to remember too, is that there's a lot of things that go into making technologies like this work, and if those things are happening faster or more efficiently, like that could be a really big change that you just don't even really notice.
Right.
um,
Exactly.
yeah, and so that is a good thing to think about too. So is it plateauing? Yeah, sure, maybe, whatever, but like, we're going to still see a whole bunch of impacts from what's happening, um, and and even like when you go from here to like way up here, like even just a light level of increase is still a pretty big change. So I don't think we're quite done feeling all of the impacts of AI personally, but
Well,
maybe I guess we'll find out.
even if the platforms are plateauing, its use is still in its infancy.
That's right.
So,
That's right.
you know, and as
And so I think
as
that,
use will increase, so will the platforms again.
yeah, and I think that that's a really good way to think about it too. Is maybe the technology itself is platforming, but the use cases are
Yep.
still growing because of adoption and people's utilization and all of that kind of stuff.
Right.
I saw that. I mean, again, everybody's ads AI assistants. It's this common news. One that I thought was interesting though is Foxit, and maybe Fox IT. I'm not sure exactly the way to say the name. They appear to be a PDF and e-sign platform, and they added an AI assistant, which I thought was kind of cool. because anytime you can make signing documents a little easier, I think that's a good thing. Um, and if people have questions of like, hey, what does it mean when I sign this? Maybe that's a valuable piece of information. Um, our friends at KPMG, so the big four, always making news, but this one was a really really splashy news. KPMG invested 100 million. That's a very large amount into the Google Cloud Alliance. And so I didn't know much about Google Cloud Alliance prior to reading this article, but it's there were Google Cloud Alliance and KPMG are working on solutions to solve complex business challenges, focus on data modernization, and have responsible AI. So that's pretty like high level. I bet there's more to it than that. The article I read was just pretty short about this. Jay, had you heard of the Google Cloud Alliance prior?
I have heard of it.
Yeah.
There are other firms that are members, like Deloitte is a member of it as well. A lot
Oh,
of
okay.
the IT companies are part of it, and
Sure.
it's all about data management, like we were talking about earlier. So
Mm-hmm.
you know,
KPMG over here, part of the
yeah,
92%.
yeah,
And then finally, nothing like ending the news on Intuit, because Intuit has also launched, or it's about to launch, or something like that. Intuit Assist for QuickBooks, so they have an AI assistant right there in QuickBooks as well. So, hey, shocking news! Everybody's doing this. Intuit's right behind, and doing it as well. Obviously, I think. Oh, Jay, go ahead. Yeah, I'd rather hear your thoughts on this actually.
no, I'm I'm staying out of this conversation.
All right.
I think
All
we
I
know
was
how
going to
I feel
say.
about Intuit.
Uh, so we'll see how effective their AI assist is. But I do think like anytime you can make accounting easier for accountants, that's a positive thing. So thanks for investing in that AI technology into it. Hopefully somebody will steal it and make other products better. We'll find out. And that's our tech news for today. That only took up like our entire time almost. Um,
I
but
know.
uh, but
That
here
was a
we
lot
here
of
we
good
go.
stuff, though. That was a lot of
Yeah,
good
it
stuff.
was. There's a lot of important news today. Lots of things going on. Um, but also, it's Thanksgiving week, and so let's face it, right? Accounting and advisory, it can be tough, right? We've talked about this on the show previously, like how draining it can be to deal with, managing lousy clients or dealing with the challenges of working within your team, or just having like a really busy workload. All those things can be like a really big drawback, and sometimes it's really hard to remember how great we really have it, like all the cool things that we have going on. And so Jay and I thought, like, hey, it's Thanksgiving time. Like, this is the perfect time to reflect on all the great things that are happening, and that are out there. And so, with that in mind, that's exactly what we're going to do here for our last few minutes. We're going to highlight the things that you should be thankful for as we head into this weekend. So let's give some thanks. Jay, you'll be shocked to learn. You'll be shocked to learn. Technology has advanced a lot. I don't know if we've ever
Really?
talked about this. Yeah, I don't know if we've ever talked about this, but there's like cloud-based software. There's like AI tools for data management and analysis. There's like automations out there. Like I don't know, but it seems to me like these things are really, really positive.
Oh, most definitely.
Right.
And I'd love to know the full adoption of cloud technology today. You know,
Yeah.
in the past, you would hear firms, well, we're on the cloud, and all they're doing is, they might be using some storage solutions on the cloud. That's about it. But they're still using
Mm.
all the internal, software that, they have the server installed in their office and
Right.
they're accessing it from their PC. That is not what we're talking about with cloud-based software. We want
Yeah.
software that's from the browser and you can access it from anywhere on any device. And it truly is a game changer. It was a game changer when I found Zero in 2012 and
Yeah.
started the digital CPA. And at that point, I never looked back. I mean, I ran businesses on that on-prem software, and what we do now runs circles around what we did back then. And
That's right.
yeah, I mean, I can't say enough about it. And the AI tools, I mean, we looked at Sift the other day. I mean, it was amazing. I mean, it
Yeah.
did a great job on what we were looking at there. And
Right.
we're implementing Keeper, and in the upper
Yeah.
right hand corner, there's a I don't know what they call it, a tax researcher. So it uses AI and does tax research. And one of our colleagues did it, put in a state issue, and it came out 100% accurate. So
Let's
for
go.
those of us that might have tax questions, there's AI built right into one of the tools that we're using that could help.
Yeah.
And it's only going to get better, like we were talking about earlier.
That's right. Yeah. I
And
mean, we're
then we
just
get
we're
to,
just seeing those things roll out, right, Jay? Right. We
right,
just talked
exactly.
about Intuit Assist, like is like literally just came out. It's been what, like a couple months now that Jax is like a
Mm-hmm.
thing that exists, right? Like
Right,
imagine as these tools continue to iterate and to
right.
change and to develop and to do all of the to utilize that the next layers of the plateau of AI, right? As those
For
things
sure.
continue to happen, like
Yeah,
the ability of accountants to be able to do their job and do their job effectively is just going to continue to grow. And so,
for sure.
no question, super thankful for those things.
Yeah,
And then, of course, automation can help streamline your processes. Like it can improve the accuracy of the stuff that you're doing, and then most importantly, and I think we all like appreciate this, and especially as I was talking about like how beat down and worn down people can get, like it saves time. It saves time for
most
you.
definitely.
It saves time for your clients. Like these advancements and automations are so important. Imagine how busy you'd be without them, right? Other things to be thankful for as we head into Thanksgiving is resilient client base. The past several years have had like an unusual amount of uncertainty between COVID, between the election of this past year. Like, there's just been lots of like, what's happening? What are we doing here? What's next? But our
Yeah, the
clients and
inflation,
also,
buyers, the way buyers are purchasing, all of that
right,
comes into it. So, yeah,
yeah, but our clients and ourselves, like they continue to adapt, right? They continue to adopt to these new technologies and understand like how that impacts them. And so that resiliency is really important. And another thing that's really important is that those clients also continue to rely and need advice around both, tax compliance and, what states they need to file sales tax in and what states they need to file income taxes in. And then also, of course, like how do I account for this thing that I purchased, or how can I make my process better by using automations that are helping you, right? Like all of those
yep,
things are your clients continue to rely on our advice in those spaces, and that's something to be thankful for as well. um, as we put this together, I thought this one was maybe a little controversial, Jay, but as I started to like write it out, like I think this is probably right. We should be thankful for evolving tax laws. I mean, sure, while the complexity might like be a challenge, it also helps to highlight our value. Plus, there's been like cool, neat new initiatives around like green energy, or even like PPP and ERC stuff, small business support that continue that even today, like we were talking about it before, is that there are still ERC claims
right.
that are out there, right? These things can continue to provide opportunities not just for accountants and advisors, but also for our clients, right? The tax laws, as they continue to change, they are providing value. Like that's kind of what they're intended to do. I know it seems absurd to be like, oh, tax laws are getting more complicated. That's great, but it's not just that the laws are getting more complicated. It's that they're being utilized in a way that's trying to directly help business owners, which I think is what's
Right.
what's really powerful.
Yep, exactly.
And then we talked a little bit about how difficult it can be to find good people, but the workforce that does accounting work, right, is a very skilled workforce. It's really 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 difficult to run and scale a business by yourself. You all know that, and so while you might be a solopreneur, right, lots of people aren't, and you have the team that helps to support you to be able to achieve your goal for your firm. You're just like the clients that are now adapting to new things, like your teammates are adapting and being adaptable, right? you have help to manage workloads across peak periods. You have like people you can rely on. I know that this is a thing I'm thankful for constantly. Of ears I can pull to say, hey, I did this today on several occasions just today where I said I don't have expertise with this. Can you talk me through what I should be thinking about on this? And then those people help you to like uphold your high standards of service, right? They're the people that may be out as your client facing server, right? They may be the people who are managing those relationships and making your business look good. And so there's no question that skilled teams and the skilled workforce are something to be thankful for. I know that I am thankful for that every day. um,
Most definitely.
right? And then we talked about
Yep.
this. We touched on this a little about the resilient client base, but at the same time, there's increased demand for advisory services broadly. Right, more folks need tax guidance and tax advice. More people are needing strategic guidance on cash flow. More people are planning for growth and AI adoption and how to manage these different things in their business. More people are interested in automation. More people are, are wanting to support, or get support in compliance and managing complexity, and
Yep.
that is exactly the spot where we fit in. Um, and so that increased demand is something to definitely be thankful for. It means that you don't have to go shoot your buddy in the foot to try to steal his work. There's plenty of it for all of us, right? We can all help each other, and we can all help each other grow. Um, I
Beautiful.
also I also think the remote environment has allowed for a broader reach, right? And so that has been doubled down on from COVID, right? I know some people like you, Jay, have been remote for decades now, or whatever it is. But not everybody has been, and I know I wasn't, but I am now, and that allows me. I service people in Arizona, or in California, or here in Texas, and all from the same spot. And that's just not something that was realistic before, um, because not everybody had adopted that same idea of like, oh yeah, remote work is fine and remote work works, and I can get the support that I need remotely. And so that remote environment has also helped to both increase demand, but also allow us as accountants like a lot of flexibility. Um,
And
and
remember, it
so
is remote work, not work at home.
that's right.
Very big difference.
Yeah. What's the difference, Jay? Tell me more.
Perspective. Yeah. I'm
Yeah.
working from home, so it's like I'm middle of the day. I'm gonna do laundry. I'm gonna cook whatever.
Yeah,
But
sure.
yeah. So, but remote work, you're in. I mean, I'm in my cell here.
Remote,
I don't
remote
leave
work
this
zone.
cell for 12 hours a day.
um, Jay, that's obviously a lot of different things, right?
For sure.
Are there other things that didn't make our list that you're thankful for as we head into this holiday of thanks?
I am most thankful for the cloud tools that we are using and the people behind them.
Yeah.
I'm talking about, you know, uh, Van Gellis, who is the CEO of Sift. I'm talking about uh, Ashley Schroeder, who developed and brought A2X to market, and now Jamie, the two Jamies.
Yeah.
These people have helped us so much,
Right. Yeah.
and
Ben Stein too. Right.
there's so many more. Looking out at the other technologies, the folks at Zero that I've made such a great relationships with,
Right.
and that have helped me since I started my run in this industry.
Right.
It's the people, and I want to say thank you to everyone that I have crossed paths with in the last 12 months, whether they were trying to sell me something and did, or unfortunately, I might have blown you off, but that happens. But thank you, and keep doing what you're doing because you are providing product to us that we need. And I also want to, and this is a little off, but yeah, say thank you to my family who have been with me through this entire journey. And
Yeah.
that's what it's about. And everybody at High Rock, it's been great. It's been a tumultuous year, and you know, we're through it. We're heading into December in a couple of days, and thank you for everybody for coming together. It's been something.
Yeah. Yeah, and I don't know that there's much to add to that, except for Jay. It's time for the automation of the week.
Oh yes.
What what automation are you thankful for today?
Well, the automation I am thankful for today, and I might have mentioned this previously. It's that lead to onboarding automation that I built a few years
Yeah.
ago, and I am looking at resurrecting that. And yeah, I'm looking forward to resurrecting that. And I could tell you that when I was using it, I was running a team of three, myself and two others. It was like having a fourth person by having
Yeah.
that automation running. And that's what we want. We want to be able to reduce roadblocks, increase the speed and efficiency, and get things done. And that's what the automations are about. So when I've rebuilt it using tools that we're using today, I will let you all know and let you all know how to find those videos on it. So
Well, that's lovely, and it just reiterates too how much of an impact that all of the people that provide support for all of these different products, how much of an impact you can have, because that's something that Jay did several years ago, and it still is resonating today. And so, Jay, I'm going to echo your thoughts to say thank you to everyone that supports us in this journey. Thank you for all of the work that you do to create awesome products that make our jobs easier. And I look forward to coming back next year with a great story about all of the new things and new advancements that all of you have made. So thank you for watching today, and thank you for being with us on the Practice Playbook in our journey. We'll see you next week. Thanks, everybody.
have a great Thanksgiving, everybody. Bye.
Bye.